All right, family. Welcome to another video. Let's check quickly if this is recording. Yeah, so this is not going to be the public one I released before. It's going to be more of a private type thing. Currently 11 p.m. I'm back in the apartment, back to work, ready to grind this out. So we're going to be in the trenches for the next few months, just working and grinding things out. Let's see how that goes. Now, I know we've been having very difficult market conditions. I wanted to reassure you guys, if you have been struggling trading these market conditions, don't worry. It's difficult. Okay, if you've been struggling in this market condition, you've taking losses, this is the video for you. I'm gonna repeat myself once more. If you've been struggling, you've been taking losses, you're struggling to find consistency, it's normal, it's expected, and don't beat yourself up over that. Okay, it's fine. All right. Now, if you've seen this market condition, I've also been struggling. Now, as a mentor, I'm supposed to lead the way, and it's typically expected of me not to take lots of losses and stuff like that. But then I can get into this odd situation where I can take losses if I force things. Okay, and it's not like I'm putting blame on anyone, or like I'm putting blame on the team and saying, "Oh, because I have to send out trades to the team, that's why I'm taking losses." I'm just saying it's my fault. Okay, it's my fault because we're not supposed to do a lot in market conditions like this. Why? Because we are trading in very difficult market conditions. So the thing, and this is where experience also, this is where you also get experience as a trader. All right. When you get into market conditions like this, and when are the times you're going to get into market conditions like this? The first 2 weeks of the year, that's January, or even the entire month of January sometimes, but typically it's the first 2 weeks of January. The market condition is going to be in a situation like this. It's going to be very weird. The last week of the year, that as from December 18th going into December 31st each year, you're going to get market conditions like that where it's just weird and the market just gets into a seek and destroy type profile. And also the month of August, the entire month, excuse me, entire month of August. Now, the question you're going to want to ask me is why, Gene, why is it that these specific months market gets into profiles like this? And this is where you want to listen very closely. All right. Now, the way the market is orchestrated to move is that the central bank provides pricing to other entities. What are the other entities? We have retail like ourselves, we have brokerage firms, we have prime brokerage clients, we have the large funds, which are the second biggest movers of liquidity in the marketplace. We have the large funds, the big banks, investment firms. Okay. So the combination of the collective liquidity of all these participants in the marketplace drives prices. That is what creates trending market conditions or the condition for us as institutional traders speculating. No, it's not like the market just basically our concept just stops working when we get into conditions like this. It's just that it's more difficult to decipher. It's not like we're AIs. We already know what the market's going to do. We already have the imputed numbers and blah. Nah, it's just that the market is more difficult to decipher when you get into conditions like this. And this is where experience comes into price action situations like this. And that's why you've not really seen a lot of action from me because of market conditions like this. And I'm going to really tone down the amount of action I'm going to be doing in terms of trading and volumes and stuff like that because I took two back-to-back losses. I'll be honest. I took two back-to-back losses, and I'm like, okay, why did I take a loss? And I realized the first one was my fault. The second one was more of me pushing. I was really pushing. I was not supposed to do anything. So that was all on me. Now let's explain this. Why are you not supposed to trade? And this is what this lesson I'm teaching you guys. This is something you want to learn for life. Throughout your career, throughout your journey, this is something you want to learn for life. When you get into marketing conditions, just like the first few weeks of the year, the last week of the year, and during the month of August, we have a thinning of liquidity. That is the large funds, which are participants, most of them, they're usually on the break. So we have August where a lot of these individuals, they take a summer vacation the month of August. Okay, you guys, if you guys live in the US or UK, you know this is typical where month of August, these are rich folks. They've been working all year. They're taking a break. They're taking a vacation. That usually leads to drying up of liquidity. Okay, that's number one. During the beginning of the year, there's going to be a lot of uh, these participants who don't resume work until towards the ending of the first month of the year or going to February. That's where they resume. So whenever I see market conditions where there is anticipated, example is also bank holidays. During bank holidays, you get market conditions like this where there's going to be an anticipated thinning of liquidity. During conditions like that, the algo will go into what we call a seek and destroy profile, meaning it's actively seeking liquidity above and below the marketplace, seeking buy side liquidity, seeking sell side liquidity. Why? Because there's not efficient liquidity from the large speculators to drive price unidirectional. What do I mean by unidirectional? I mean moves like this. You can see July, we're making moves and we really excelled July, right? For those of you guys that trading in these market conditions, we really excelled July. All the sell bearish move really excelled in moves like price action like that. July go into that. Once it gets to August, look at the price action month of August, right? Boom. August 1st, we have a low, initial low, take out the low, we have initial high, take out the high, we have initial low, take out the low, we have just back into this, back down, take out the lows. Next day, same thing. We have initial low set, initial high set. We'll take out that high, take out previous high, take out the lows. Next day, same thing. Low, take out the high, take out the high, take out the low. Price not really moving in any direction. Next day, same thing. Low set, take out the low. High set, take out the high. Nothing really done. This day we're trending. Next day, same thing. We actually even speculated on this, even though we did not trade on this. Just Z the market profiles. So it's a profile where the market is just actively seeking liquidity, taking out all participants because this is very light volume of liquidity, very light liquidity. Okay, the collective liquidity of retail is going to rest above all highs, below all lows. That's the way it works typically. Liquidity is going to rest above all highs and all lows. So Algo will get into situations like this that allows the interbank traders to capitalize on. So it will get above an old short term high like this. Interbank traders can capitalize on that short term high, runs short term low. Interbank traders can capitalize on that short term low. There's going to be sell suppression here, price shifts down here. Interbank traders are they're buying up, buying up, buying up, seeking liquidity, opposes out the marketplace. Boom, price traces into. You saw me do a video in this. Price traces into a small low on the 5 minute time frame, that's a gap. 15 minute time frame, we have a small low, fair value gap. Trades into that, sells off, takes out low. We actually call this out. Next day, Asia sets initial high and low. London session takes out the high. We'll have a short term high leading up into New York session. Take out the low, take out the high, take out the low. You see, price is not really moving in any direction. Price is just actively seeking liquidity. So this is a seek and destroy market profile. And if you don't know anything about seek and destroy market profiles, seek and destroy market profiles, they're one of the hardest for you to trade. And typically, what we like to do is we like to stay out of market profiles like that. Whenever we spot seeking destroy market profiles, we don't want to be active speculators in seeking destroy market profiles because a lot of times we can see price just suddenly whipsaw against us. Let's say, for example, you're buying this thinking it's another block, see how price just whipsaws against you, goes all the way up, breaks up above this, price starts to come down. You think it's an auto block you want to buy off of, price whips down, takes out your stop loss. You're frustrated. Same thing over here. Okay, you think this is an auto block, you want to see price go bullish, alpha, boom, takes out your stop loss, consolidate sideways. Same thing over here. Price drifts down, price goes up, you think it wants to use auto block, takes out the low, takes out the high, consolidates into next day. Same thing London session, high, low, just taking out liquidity. That's typical during the month of August. Now I know a bunch of you guys you're not gonna listen to me. That's your nature, but you guys do this a lot of times. But it's my job to guide you as a mentor and be honest, really, really honest with you guys. And you guys have seen my performance over the last 1 week. I would say it's been poor, extremely poor. All right, and if it was me, typically I would be frustrated and annoyed. Like, why is the performance poor? But I'm not. And this is something you guys should wonder. Why is you not really frustrated about the performance? Because I know what I'm doing wrong. I'm not supposed to be training market conditions like this. Now, the mistake we made today was the fact that I failed to prefer the market. And this is where you can learn from my mistake. And this is how I also learn from mistakes. Okay? Now, the question is, how can you predetermine a seeking the share market profile to know when to avoid trading? Now, one of the hallmark of a professional trader, or one of the hallmark of a very successful trader, people like myself or ICT, for example, one of the things we do, something which I've not done recently, so you can fault me on that one. But one of the hallmark of a professional trader is learning to know when to not trade. Learning to know when to not trade is a far more better skill set than learning how to trade, because now it helps you actually preserve your capital. It lets you know when you're supposed to stay away from trading. Okay, and basically, the way you can spot a seek and destroy profile is number one, are we in the season or a day where we can potentially anticipate seek and destroy market profile? So when are the scenarios or days where we can anticipate profiles like this? Number one, just like I said before, the first few weeks of the year, the first 2 3 weeks of the year, the month of August, the last 1 week of the year, we can expect profiles like this. Okay, this is a list right now. First few weeks of the year, that's first 2 3 weeks of the year, entire month of August, which is summer vacation. I'm not saying every August is gonna be like this. I'm saying most times you're gonna get profiles like this. And then during the end of the year, also you get situations like this. Number two, during bank holidays, okay, during bank holidays, uh, it market oftentimes we get into situations like this where it really does nothing. It just goes sideways because there's really no active participation from uh large fund traders. That's the bank holiday. Okay, so during the break. That's number two. Number three, days leading up to NFP or FOMC. So days leading up to NFP or FOMC or actual FOMC day or NFP day, you get situations like this. That's where a situation where the entire traders or participants, you're waiting for that release, FOMC release statement. You're waiting for that NFP statement. So there's going to be a thin of liquidity, and price oftentimes can go sideways. We can You're gonna see multiple examples of that. Just go on your chart, look for FOMC, then see typical price action. Price will move sideways and then consolidate. Then on the news release, you get moves like this. Boom, very explosive moves in one direction. So typically days like that or a day before those days, you're gonna get situations like this. Okay, that's number three. Um, So yeah, and also number four, after we've had an overextended move on our time frame and we've met our time frame target, you're gonna get moves like this. So let's see if the last 3 to 4 days has been massively huge candles on daily time frame or weekly time frame, huge candles one direction a lot of times, and when we get to an opposing, let's say for example, we have price has been bullish for the last 4 days, huge, big juicy candles and we get to a primary rate, we can anticipate situations like this where we don't just get a straight reversal. Market will go into profile like this to accumulate more liquidity to either make its next move, let's see, continuation with the direction, or possibly even reverse, or you get a retracement. So those are the situations where you get moves like this. Now, once you have that in mind, once you have that profile, once you already have that profile, the next you want to do is you want to confirm with actual price action. Are we likely in that situation? That's the next thing. And this is how you can really avoid risking life on days when you're not supposed to be risking life on. Okay, for example, today, right? Now look at today's price action, right? Today's price action, no news, bank holiday. We're not supposed to do anything today, so that was the first mistake I made. And again, this is a chance for you guys to learn from my mistakes. We have low, initial low of the day, initial high of the day, leading up to London session, London open. We take out that eye, but we're not really doing anything. Take out the eye, not really doing anything. Leading up into New York session, boom, we run Asia's eye. We drop down into this breaking block, and I said if we take out this candle, it could be a case of possibly bearishness to take out the low. We saw initial one-to-one risk to reward, like 10 pips. All of a sudden, boom, we sell off. We trade back into these two down candles, which now is a breaker block because this was the candle used to run out. This short to mine, this short to mine, this short to mine. It's a breaker block. We trade back into that, and I showed the short on Discord channel. And where were we reaching for? This low, this 1 hour fair value gap. Specifically, nah, excuse me, from the actual low, specifically 10 pips below this low. We dropped down 10 pips below the low. I want it to be very accurate. Okay, 10 pips below the low, the line there. So we can do something like this. Also, by the way, shout out to Nadeem for showing me how to straighten the lines. So I literally used to get frustrated trying to make these lines straight. So you simply click on the line and hold the shift button and it's going to just straighten everything out. So 10 pips below this low, we reach into that, boom, see price goes up into inefficiency. All right. Anyone that was trying to buy off of this bear shadow block thinking, oh, it's a bear shadow block, I mean buy off of this bear shadow block, they're sucked out. They are sucked out. This is why I say market conditions like this. It's usually weird. And then you get a London close straight setup. During London close, we trade up into that inefficiency, specifically the consequent encouragement of that 15-minute uh, fair value gap. We sell off initially, go back into bear shadow block, we consolidate a little bit, and then we break down, take out the low, and now we're just hanging in between this range. So by watching the nature of price action, was there a willingness in price to trend? I thought there was, but no, I got it wrong. Why? Because watch how we take out this low, we don't really do anything until we get to New York session. All of a sudden, boom, take out this line. Then we start consolidating, So this was, and unfortunately, I was retail in today's situation. This was sucking in retail buys, and all of a sudden, boom, reverses against us, then goes sideways. So this is a learning moment for me, and this is something I'm journaling, and that's why I had to do a video. So hopefully this video was insightful to you guys all. Will be made available right now, so you can watch it. I don't think there'll be passwords because I'm tired of trying to verify you guys. So you guys will have a wonderful day, and I'll do another video on the market forecast.